Great to be here today. Very excited for this discussion. I'm Nisa Amoils. Grasshopper Capital is an early stage venture firm, much like the last panel. We've been investing for the past decade in venture. And I'm also a former securities lawyer. And we do a show called Coin Scrum, which is on in an hour if you want to learn more about DeFi. So welcome to everybody. The very important topic that we're talking about is how to expand this space into retail. And so if you could all just give a brief background overview of who you are and what you do at which company. Jordan?
Yeah, hey there. My name is Jordan Lyall. I work at ConsenSys within a group called Codify. Working on a number of projects there. The one I'm most excited about is the DeFi score. My team launched the DeFi score at the end of last year, which hopes to create a framework around risk as it applies to DeFi protocols and pools. I know both of these gentlemen on this panel. I worked with David at Totle and I worked with Ejaaz at ConsenSys, so I'm really excited to be here and kind of reconnect with these guys. Excited for the conversation.
David?
Great, thanks. Hi, I'm David Bleznak. I'm the founder and CEO of Totle. We aggregate all of the decentralized exchanges on the Ethereum blockchain and provide an easy access point for all users and businesses to DEXs and automated markets for reliable DeFi aggregation. And you can try out our product at totle.exchange today. Glad to be here.
Ejaaz?
Hey everyone, thanks for having me. My name's Ejaaz. I'm working at Coinbase as a product manager, primarily focused on all things staking and DeFi. So really excited to be here and excited for the discussion.
Great. So what products and features need to be developed in order to expand to a wider base of retail users?
I think so much. I think there's just so much room. There's so much gap that needs to be filled in here. So many features and rails in order to get to like this magical mainstream audience. Like I think it's amazing where we're at now, and it's so much fun. And I consider myself, a humble yield farmer. But in order to get the mainstream user, like it's going to be years. Whether it's safety protocols, I'm still imagining these are all completely still decentralized interfaces, security protocols, apps. It's still years away from mainstream adoption. But I couldn't be more excited to be helping build that future.
I can go next. So my 2 cents here is there's a lot of, to follow off Jordan's point, there's a lot of kind of complexity seen in the DeFi ecosystem. And I'll be the first to say I'm fascinated by everything that's getting built here every day. I think it's so hard to keep up to date with all the new innovation projects and teams and development. I mean, just this week you've seen Set Protocol announce their V2, which I'm really excited about. And the way I think about this is it was mentioned on the previous panel where all these different money Legos are being built. And I think the way I perceive it is if we want to introduce this to a wider market or enable greater retail adoption, we need to kind of abstract away a lot of these complexities. And I think a lot of apps are starting to address this. You see them doing this with things like Argent Wallet. You see things like DEX aggregators, like 1inch Exchange. And I think these kind of service layer apps will start to play a bigger role. And I think that's going to be the primary focus of the space over the next couple of years.
Yeah, I'll jump in there, and I would agree with both the comments here so far. I think it's going to be a long time before we get what we consider traditional retail participants to be holding and trading and investing, utilizing digital assets as we see them, crypto assets and Ethereum tokens. But I think that we're getting there. I think there's a couple different routes that we get there. I think that the abstraction via layer 2 technologies is a huge factor in this roadmap to get to these retail users, or a scalable layer 1 that doesn't require such intense economics or gas costs that we're seeing as of late. I mean, it just doesn't really make sense for even trades. I mean, we do DEX aggregation at Totle, so making trades at trade sizes of $100 even can cost you $20 today, and it's just not economic. It's unreasonable. And most average trade sizes for retail investors, if you look at your E-Trade, your Schwab's, you're looking in the $1,200 range. It's not really I guess even usable for the broad retail investor or trader. But I think that it's either going to be such a great abstraction with a settlement layer using something like how Ethereum looks today in a layer 2 type of solution, or many layer 2 types of solutions, and we're already seeing several of those come online. There's rollups, optimistic rollups. There's zero knowledge rollups. There's also other types of flavors of layer 2 solutions. Synthetics is a cool example. I know IDEX has just recently announced some new innovative products that they'll be releasing soon, or IDEX 2.0. So I do think that it's going to be a significant abstraction from what we have today, and most of these layer 1 blockchain will look more like a settlement layer in the back end, and less so something that we interact with directly.
And David, while we're on the subject of aggregators, and as flash loans gain traction and price discrepancies narrow, how does that affect their business model?
It's a great question. I think it just is an added component of parity in the marketplace. You're seeing that it's easier to get to a place where where there's less arbitrage, or there's the opportunity for everyone in the world to participate as an arbitrageur, and that allows for markets to be more stable. And so I think it's just a component that doesn't exist in what we would call, the traditional financial system. You need significant capital or assets in order to borrow large amounts of cash or other assets. And in DeFi, so long as you follow the rules, you can access extremely large amounts of capital without putting up collateral in that one block. So I think what that does is it adds a component of arbitrage that doesn't exist in the traditional finance world, and just makes, I think, over the long term, makes these markets even more stable. And I think there's going to be other iterations, other innovations that we can't even predict or think of or see, just like flash loans came about. And that'll continue to happen at a fast rate. That's my prediction.
So while we're talking about retail, we need to talk about regulation and risk. Vitalik Buterin said this week he thinks a lot of people are underestimating smart contract risk. What makes some protocols safer than others, and have things improved since Black Thursday stress test?
Yeah, risk is something we think a lot about in my teams at Codify. It's still a long ways to go. I think anyone who says that like these hacks and vulnerabilities are behind us and we're onto greener pastures and complete safety is kidding themselves. It's definitely gotten a lot better, but if like the most innovative, the hottest protocols are testing in production, then we got a ways to go. But I think that, look, it's difficult because I think the question at hand is, how do we encourage developers, encourage like innovation on some of these platforms, yet still have user safety at a premium, at a focus? It's kind of hard to balance the two. because you need to be on mainnet in order to get some kind of critical mass, right? But you don't want to rush to mainnet and leave your users, lose their money. So it's going to take, when the option is, okay, let's spend 10 grand on an audit, or let's just YOLO it and throw millions of dollars into this pool, like you're out of options. So I think we need to kind of rethink the path towards innovation on the Ethereum main chain, and whether that's kind of a community-driven push to get security at the frame of mind. I like what Rari Capital is doing, where they're limiting the volume, they're limiting the size, the initial deposit, just to make sure that the economics are there, making sure that the code is tight and the risk for vulnerability is minimized before they kind of open it up for everyone. So I think there are things we can do. We're certainly trying at the DeFi Score and a number of other projects here at ConsenSys to, or if we want a chance at mainstream adoption, it needs to be rock solid, not just code audits, not just user experience, but education. We've got a long way to go, but I think the future's hopeful here.
Ejaaz?
Yeah, I guess to add to that, I kind of view risk management in two different perspectives. The first is, I guess, what people like to term centralized, but I want to kind of break that down a little bit more. Sunny Agrawal from Tendermint and Cosmo's team actually summarized this pretty well in an article that he released recently, where he talks about the DeFi idea maze. And the kind of main point that he gets across there is, in order for this massive adoption to occur, I think it's going to be a crawl, walk, and run approach. We're not going to go from 100% complete centralization to 100% decentralization. I think there's going to be kind of a varying gradient. And what that might look like is, for example, integration into fiat-oriented legacy systems. So you can see that with stablecoins, for example, with USDC as a prime candidate and its use in DeFi, for example. Alternatively, you could also see it within law. So Open Law, which is a project that has come out of ConsenSys, helps use smart contracts and kind of normal regulatory bounds and means within the real world to tie into asset initiation, issuance, and distribution via Ethereum. And then the other side of that is the decentralized way that we can kind of protect against certain risks. So far, it's been things like over-collateralization, as can be best exemplified by the MakerDAO protocol. You've got Nexus Mutual, which is doing decentralized insurance. I think they recently hit a milestone. I think they announced it for their last month, which they now got over $17.5 million worth of outstanding smart contract insurance out there, which is the highest they've ever seen. And then in addition to this, we've got kind of like smart contract audits and necessary testing that comes along with that, because there are still exploits that are available and will be found there. But I think the idea of DeFi and Ethereum in particular is that it's very robust, and it'll always be able to kind of modify itself to be more resistant towards any kind of effect or bug that is found there. So that's my perspective. I see it in two different ways.
And we know the regulators are trying to get involved as well. Any thoughts on regulation?
Yeah, so I think you've probably heard this a lot, but on the regulatory side of things, it's always a little bit slower. There's an educational gap, and that's something that we haven't mentioned just yet on this panel, which is a huge friction point. It's often, it's easy for us to kind of remain within this bubble of DeFi and get really caught up in all this innovation that's going along. But say, for example, the rest of my extended family, for example, have no idea what I do for a job, for example, or what this technology is. And I think we need to kind of bridge that gap quite importantly. And the regulators are a primary kind of candidate there. And at Coinbase, we work very closely with regulators for that precise reason, that we want to kind of progress this industry as best we can. And in a timely fashion that favors all and doesn't stifle innovation.
David, you were saying?
Oh yeah, I was going to jump in on that part. Yeah, I think that from a security standpoint, I mean, I'm a big believer in free markets, and that the market's figuring these types of things out. Might be a less common opinion on this. That I think that there's a lot to go off of in terms of things like Nexus Mutual, and I think we can see other iterations of that. Maybe mutuals, but other types of ways the market figuring out answers to these problems. You see things like open and other types of even other ways to bet, to wager on a catastrophe, or it's similar to insurance products. I think that those will continue or will grow in popularity, and so I think by hedging your risk via the markets is going to be, at least in my opinion, in the medium term, is going to be the way that we're going to see some protection for users. I see kind of two sides of this. There's the kind of the radical side of full decentralization, and that will utilize these free market type of systems, and then you see like the traditional finance world and retail as we see it today, fintech coming into or utilizing these systems as a settlement layer or as a technology for finance. And I think that really depends more on the centralization, and as Ejaaz was saying, that will kind of be like a slow roll into the decentralized technologies. Whereas when Bitcoin came out, it was an extreme radical system. So that and now is popular and it trades as paper on our stock exchanges and all those sorts of things. So the story is yet to be told on which way the future holds for these types of things. But there's kind of two approaches to that. And my belief is that the markets will figure it out.
And just to quickly just build on that, the kind of perspective I just gave would imply that there's a very steady progression of regulatory kind of amenience. And I don't think that'll necessarily be the case or how we expect it. Because with each of these different cycles, and by cycles I mean kind of technology progress or development, there's always one use case or application that drives the rest of it with it. So for example, dare I say, back in 2017, there was the old ICO craze, which brought crypto into the kind of forefront of the media. And kind of as we kind of drive through these different kind of cycles, more and more developers are attracted, the moat grows stronger, and different teams kind of like build on different things. And I think that will be the driving force between a lot of regulatory conversations and progress. So I think that's an important thing to note.
Mm-hmm.
Yeah, definitely. Having these regulators actually come to the table and make some decisions is a huge part of it, and we haven't really seen that. They've taken, similar with the internet, this wait and see. We don't want to disrupt, but also at the same time, then with ICOs, just come down very hard, on the securities laws. So without any changes to them from almost 100 years ago. So it's going to be interesting to see. I think you're right. I think that as regulators actually now have had a few years and are understanding some of this, and new regulators come into power, we'll be able to actually make some decisions on how to really help this space flourish.
So now we're seeing more DeFi accelerators or funds spinning out, and Huobi just announced something. What about Coinbase? Is that next?
So I won't comment specifically on that, but okay. So to give a bit of context, the team that I work in on Coinbase is known as the crypto team, and that's not a team that I think is widely known to the wider audience of people that understand and look into Coinbase. And we're a team dedicated to focus on crypto native stuff. So like staking, like DeFi, like how all these different protocols work. And I think that kind of forward-thinking approach is important, and something that we kind of embody at Coinbase in particular. You've seen it through things like the USDC Bootstrap Fund, where we're kind of working with Compound and DYDX on a bunch of things. You've seen it with the Price Oracle APIs that we're kind of working on and integrating with the Compound open framework. So I think there's very much a nature for communication with these different communities. I, for one, as Jordan mentioned earlier, I've been at ConsenSys and immersed in that Ethereum community with a lot of these different protocols. I've been to one too many ETH hackathons in my time, and I can't wait to go to more when the COVID ban lifts. So I think it's really important to kind of extend that bridge and make sure we always push the path forward. And like, I'm not trying to, do this as an advertisement at all, but, we're forward thinking when it comes to how we can help the community in that sense.
So any comments on whether yield farming is the future of bootstrapping users and liquidity?
I can say something very quick to this. So I think there was a really cool analogy displayed on Twitter, I think a few weeks ago, which was, this is kind of a similar method to where we've seen in traditional startups, where we kind of incentivize users to maybe start up an account and get $10 free of credit. And it's quite similar to see this kind of approach with yield farming in terms of attracting new users. What I think is really unique here is the governance component of these different tokens that are put through. Prior to this, kind of we've seen token distribution to be primarily through ICO vehicles and such, and now we're seeing kind of a more organic way of people to help bootstrap a protocol and help influence how these different parameters or protocols kind of like our work and govern and function. So I think it's quite unique. On the other side of things, I think because of the open source nature of blockchain, which is weird and very, very wonderful, there's also kind of certain downsides that we see with maybe kind of projects or tokens that might not be focused or have the kind of governance component at heart. And I think it'll be interesting to see how that plays out.
I love it from a meme perspective alone. I mean, it's amazing. It's just generating some excitement. It's kind of leading things from the DeFi perspective, which is really just leading this whole crypto bull market, this mini bull market that we're seeing. I think obviously it's a great concept. It's nothing new. It's nothing specific to DeFi, right? Like incentivizing liquidity has kind of been a thing even in traditional finance. But I think what we saw in early days of yield farming, early days being, a month ago, where like projects like Comp, they were kind of incentivizing, and no fault to them necessarily, but it was kind of incentivizing the wrong behavior, this greed, this kind of YOLO mentality, and what they ended up kind of adjusting the returns on what you might see on some of this yield farming APYs. I'm really excited about projects like what Aave is doing with their Aavenomics and their whole system, where they're kind of tying security and risk into yield farming. And as a user, you're able to access these returns by farming or staking your lend token, but you're really kind of serving as a backstop, or you're serving as this extra support to this Aave ecosystem, where you're almost like the liquidity or the collateral of last resort, as they say, where you're really supporting the network. And it's not this greed mentality, at least the sense that I get from my perspective. It's really an eye on the long term safety and security and the user experience down the road, and not just necessarily a quick cash grab. So I'm excited about things like that, where it's tying in long-term network value into returning the yield in the short term.
Yeah, I mean, I would agree on the meme aspect. I think that's where it thrives the most. We've had this concept since Coinbase Earn, and probably other types of liquidity mining mechanisms that have been out for many years. So I think that it's a great meme. It's a great way to attract attention to something that helps grow the space and helps users understand more about the advantages of DeFi and of being part of of holding these tokens and being part of these communities and protocols, and what that means for people. So I think it's part of the education process. I think it's a great meme. It's a great trend, but that's really, I think that's the limit of it, in my opinion. I think there will continue to be other types of incentives. I mean, that's really, it's incentive mechanisms, right? There's going to be many of those, and that's what we can do with the democratization of value through Web3.
So we have 2 minutes left, but what do you think about the trend of using real-world assets as collateral?
I could start. I think that it's a touchy subject. It's very hard to bring off-chain collateral information on-chain in a safe and secure way that's reliable. I mean, I'm a big believer that of what is on-chain and that being a truth layer. And so, I mean, I think we'll continue to see it. It's inevitable for people to try, but I think it'll ebb and flow a little bit. You'll probably see people abuse that as well at points in time, and so that's what I think it'll happen. I think it'll grow in popularity, and then it will also be an issue that will need resolving in the long term.
Yeah, I guess to echo David's points, I think this is going to be something that will be tried, if you like, and then the kind of result of that is going to be either a compromise of, once again, I mentioned it earlier, like the centralized and decentralized aspects of these two different worlds, or there'll be kind of like a settled framework. Examples of that happening already. I know the guys at Realty have been seeing some pretty cool success there. Trading these different tokens. I know it's only for accredited investors right now, but it's a step in that path. Then I believe that there was a proposal on MakerDAO to accept TIN and drop tokens, which were meant to be kind of representations of these real world assets. So there are steps being made there. How that kind of pans out, I'm really curious to find out, and something I'll be keeping my eye closely on. But I think it'll be a step-by-step progress.
I just think, I would add again to that you need enough value on chain for the economics to be there, for there to be a system where you can rely on the economics on chain, and then the off chain components really just play into that. So you need to be able to stake or put up enough value on chain in order for there to be enough risk or enough stake to really work out the economics. I think DeFi Money Market's doing a great job. I think they're coming on next, and they're also utilizing things like Chainlink and others that are doing well with this. Jordan, I don't know if you had points you wanted to add.
I think I'm bullish on that as well. It's going to take time to get there. It's not going to be easy, but like I envision, the NASDAQ on Ethereum. So we have a ways to get there, but yeah, everything's going to be on chain. Everything's going to be transacted on Ethereum.
Well, thanks so much, guys, for joining us today.
That was exciting. Thank you, guys.
Thanks, everyone.
Thanks. Bye.